What's up everybody, Tom here with another video. Well, that was an interesting last 24 hours in the stock market, wasn't it? In today's video, we're taking a look at our technical analysis levels together for the S&P 500, NASDAQ, Bitcoin, dollar index, Tesla, and more to try to find out what just happened and whether this can be sustained. We've got some key critical resistances now being met by the market, and this happened once before where it went up and then went down. Will it happen again? Stay tuned. Alright guys, what a sea of green. Look at this, a sustained gain across all of the markets. We have Apple up 5.38%, Tesla up 6.36%, all of the FANG stocks, Google, Microsoft, Amazon, pretty much up across the board in a sea of green 3 to 4% yesterday. Now this has happened before, and as we saw last week, it bounced up and then it came down after that initial flash crash. Now, this was a little bit more sustained. It wasn't one sector. It actually moved up across a whole bunch of sectors. Let's take a look. Russell 2000, IWM up 3.55%. Truly, the Russell has been one of the greatest investments over the last 6 months. NASDAQ as well, 2.89%. SPX, 2.32%. And the Dow Jones still lagging behind at a 1.93%. And it will continue to probably do so due to the companies in it. When we take a look at the sectors, what was beating everything for the end of the day? It was technology barely eking out above the financials. And then we had energy after that and industrials. So I'm a big bull on industrials and tech, as you would know. I've also been quite bullish on financials and energy recently, ever since really the US election and that period where we started going into value stocks. Value stocks tend to run 3 to 6 months. We're going to run month about 4-ish of the full turnaround. So we must be getting close now to these financials and energies finding their peaks. So be careful there, but still they're outperforming most of the sectors in the market. On the downside, we had real estate, we had consumer staples, etc. not doing so well. And I would expect consumer staples to continue their slump for some time due to their high valuations through the pandemic as a defensive type of stock. Now, when we're talking about what we're prepping for March, if you missed the weekend video, March can be a bit of a negative month. It's a neutral to flat month generally. And then April is usually the stonker month. That's the month that does so well. On historical averages, you can see here 1.5% over all of the history. So in a hypermarket, possibly April could be even better. I'm certainly very bullish in April and a bit more neutral in March, even after yesterday's move. Let's talk about earnings. Zoom came out with earnings, another stellar earnings from Zoom. We spoke about this on the stream yesterday. It was breaking above $400 into the pre-market, a little bit of insider trading possibly there, I think. And then Zoom had a great earnings, up about 8 or 9% aftermarket, going straight into the resistance, and it was a good trade for sure. I'm not so big on Zoom's long-term prospects, as I've said about Moat and other things, but I do think that that was a very nice play there. And we've got some interesting other ones coming up. Snowflake and Splunk as well later on the week after hours. Both of these stocks beaten down quite a lot recently. I know Splunk's been on a hiring spree. That's an interesting thing. And Snowflake also beaten down well off those 400 highs that it had. Now, are they highly valued? Yes. Is Snowflake potentially overvalued? Potentially. But the thing is, a good return and a beat there would certainly send Snowflake going hyperactive. So some interesting stocks returning near the end of the week. So what's happening? Wall Street rallies, of course, on US stimulus and some vaccine hopes as the bond markets calm. So the bond markets haven't exactly dropped or moved anywhere. They're stabilizing. And when we look at the technical analysis, you'll see why they're stabilizing. It's right at the key point. Let's get into the technical analysis now. Volatility index, guys. We went as high as 30, as the VIX likes to do. It doesn't hold it for long, and it comes back down. We're sitting around 23, and this 23, 24 zone, I think, could be where you see the next bounce. Now, everyone's talking about the S&P 500 reaching like crazy highs, 39, 20 or something like that yesterday. But in the futures right now in the Asian session, we're actually starting to drop down a little bit. We're 38.98, down 0.2%. And the US 100 is also coming down a little bit. So don't celebrate just yet until we get through key resistances. We don't know that volatility is out of the market for now. It did this last week. It's kind of looking a little bit trappy. Why is it looking trappy? Dollar index. Why is dollar index bulling so hard? 91.134. We're moving now towards 91.5. Generally, if the dollar is strengthening, what does that mean? It tells us, the retail traders, and tells everybody that risk is off in the markets. Risk is off growth assets right now. We go to the weekly. We're starting to approach the 20 exponential moving average. Look here, little 20 exponential moving average. We close above that zone here. That would be quite bullish for the weekly. I'll be watching that one. And what else do we have? Fed Chair Powell this week and non-farm payrolls on Friday, which we should be live streaming live on the charts here. It's all happening, and dollar index is rising or bulling into this event. Now, it did so last time, and the non-farms couldn't get it higher. In fact, it sold off after the non-farms, if you remember. But if the non-farms result puts the dollar index up, I would expect a shock to the markets, especially if the US dollar continues to rise, as it's putting pressure on commodities across the world. We're seeing silver, gold, and others falling quite a lot. Bitcoin also coming down a little bit here, hit 50,000, which is beautiful. We talked about this level yesterday during the live stream. What a beautiful zone this was. 48,000. We saw this evil shooting star candle on the 1 hour, and then we had a close through the wicks, which was enough to send some bullish movement up. We then had a beautiful retrace for day traders. Great point to pick it up. Once you see resistances broken like this, it's a great point to pick it up straight into the 50,000. And then the psychology of that level, considering, of course, what's also happened in Bitcoin recently, which has been a pretty big decline, has led to some selling pressure. Now, this will be the test today, 48,000. I wouldn't be surprised to see Bitcoin back at this zone. If it does reach down here and it cannot find support, we go back into this structure and Bitcoin's starting to look negative again. Really, it wants to hold this 48,000. It wants to move above 50. If we can move above 50, we go towards the 52. We get above 52, 55 would be the next target. And I'm quite bullish on Bitcoin over the longer term. At this stage, I think that it could be a bit murky during March, another bad month historically for Bitcoin. And with dollar index also strengthening, it may put some downward pressure on Bitcoin as well. Silver, downward pressure is clearly here. We've got the trend line. All we can say is this trend line here on the daily, better hold for silver, and it's starting to look pretty bad. Every time it's rejected this zone with wicks, you'll notice a wick, a wick, a wick, a wick, a wick. All those wicks point to me saying that there is a lot of buy momentum there. If we start to close round here and we don't get a wick, then the buying momentum may be finished in silver, and we could be looking at a move down to the 25. Now, I wouldn't like that so much, but that's just the reality of the dollar index moving up. It's putting pressure on silver and severe pressure on gold. Look at this new low during the time of this recording, 17.15. We've talked about this one on the weekend. I think we trapped this one fairly well. My thought process is that we should be going down to at least these 1670, 1680 kind of supports, and that's going to line up fairly well with a trend line that goes through the wicks here. So we've got the last low, we've got the higher low here, or the higher trough, and then all of this will intersect around this 1680 zone with previous resistances and previous supports. We knew that when gold went through that 1760, it was on, it was going to be sold pretty hard, and right now it's really getting pressured. So try not to catch a falling knife with these types of trades. Remember, it's about trying to find structure. And when you have structure and it moves up, you know it's going to the next movement. It's considered that level. Usually structure has volume in it. All of these types of analysis tools you'll want to use together. Definitely subscribe if you want to find out more about those. Tesla, another nice J of trading here, 718. Market closed 6.36% up. Let's take a look at what this means for Tesla. Well, let's call this the anomaly level. This was a flash crash that happened in all of hyperstocks. So quick rejection. I like the close is the key. So the close was the key here. The close was the key here again. What is this starting to look like? A double bottom. And double bottoms are great for bulls when they break through. So let's say you're a Tesla bull right now. All you're looking for is a close above this 1744 zone. You want to see bullish pressure, movement up here. I would expect some selling to come through here if it happens. And then if it does get through and close, the bulls are back in Tesla. It's been relatively negative with a series of lower highs coming through here. And even this could be a lower high if the market does stall today. So all of these things making it tough for Tesla. A lot of negative press out there, a lot of competition coming through from Chinese EV manufacturers and other places. So be careful here on Tesla, but the support seems to be holding and the resistance is certainly quite key. So let's have a look here at 10-year yields on the Treasury notes and see what I'm thinking about it. Same as the weekend, it's at a critical point, the 1.45. Now, you look at any of the Treasury or bonds or anything like that right now, they're all at critical support or resistance levels. The market was freaking out because of supposedly the speed of the move. Now, you look at this and you say, well, is this at previous support and resistance? Yes, it is. It's hovering and coiling. Not enough information yet. In fact, yesterday it was actually up a little bit. Go to in the 4 hour here. You'll notice it actually did go up during those 4 hours. Does this mean anything? No. Until we start to break out high above here, above this 150, or we break out low, we can't be sure that this move is over in bonds. And this is what has me a little bit concerned about that quick retracement on the market. This isn't telling us that it's over. It's just saying it needs a break before it makes the decision for the next move. So look to the Treasury yields, look to bonds. We don't often cover them on the channel, but sometimes it's worthwhile. And while I don't think this is that much of a concern when you're talking about hypergrowth stocks and you're talking about growth in general, as I don't think they're that heavily correlated in the new economy of, let's call it Fed money, but with Papa Powell. But yeah, this is the zone and this is where the correlation is happening. GME and AMC also held relatively well yesterday. I know we've got a lot of followers from that. We had 18% up in GME and around 14% up in AMC. That's a good day, and it's, of course, a strong bullish candle. The first one we've had in some time. We'll be talking about that, the live stream for the Tuesday market open. So if you're interested, come and join us. Let's see what happened on the stock market. This is the SPX, where you should always be doing your analysis. And instantly I say, well, it looks very similar to last time. The 3,800 was always going to be the fight between the bulls and the bears. We closed to 3,812-ish on Friday. We instantly opened above that in the futures. Let's take a look here at the 1 hour on this market. A lot of congestion through that 38 kind of 60 zone. That's where we were in the pre-market, and we opened up. We moved up, and my expectation, as I said to the community, was that we'd move straight to 3,900. We ended up going to a 3,914-ish, and then moved down into the close at a 3,902. And the futures went higher, and now they're back to 3,898. So as that dollar index continues to move up, it's putting pressure on the SPX, on the NASDAQ, etc. If we draw up these two horizontal lines, this is the resistance that we're trying not to break through. SPX here, 3930. It breaks through this resistance, and it's going back to our fabled trend line and probably going to go and kiss the 4,000 area. So 3930, it's all critical. We had critical bear bust kind of levels at 3,800, and then instantly now we're putting the bears to rest if we get above the 3,930. It's super up and down here on the markets, and this is creating great day trading opportunities with 5-10% opportunities in so many stocks. But at the same time, it doesn't give us a clear direction of the market. It's just saying that we're highly volatile each way, and the market's trying to repurpose what it's going to do next, with nasty Wall Street making the decisions probably based on how many calls are being opened. Look at the NASDAQ here. It's the exact same thing, except this time it's around that 13,400-ish zone, 13,360. A break close of resistance above this zone. What's that telling us? Effectively, we've got a little double bottom here, and we're back into the bull trend for now, moving back to those, of course, trend lines, moving back towards the 14,000 first touch for the NASDAQ. So things could be bullish in literally a matter of 24 hours from looking very bearish on the weekend. And this is trading in the markets. For investment, as I always say, if you have the powder dry and you're finding stocks that are hitting key critical supports and you like them, there were quite a few doing it last week. We looked at them on the channel. Then you buy them at the key points and you have the powder dry for these opportunities. Some stocks were down as much as 30 to 40% in the hypergrowth segment. So there were opportunities there if you were to take them. Are there more opportunities on the horizon? Of course there are, guys. There's always another opportunity right around the corner. Never feel the FOMO. Always just feel the ability to potentially find the next opportunity. 200 simple moving average here on the 4 hour futures. really you can see the clear resistance, and a lot of it's going to come down to today's trade, whether the bulls regain full control or it's just like last time with a movement up, a quick movement down, and we instantly start pressuring the 3,800. Now, if we get another decline on this US 500 and it comes down and breaks through 3,800, I think it's going to be pretty brutal, because this happened twice at that point. That means that there was so much trapping of the retail community where people were buying and it's all over, it's all good, buy the dip, that we're not only probably going to go 3,700, but yes, that 3,600 should come through if we continue to move down underneath. It's a big if, because that dollar strength is happening. So hopefully everyone is staying safe out there. Come and join us. Live stream tonight, 10:30 p.m. my time, Australian Eastern Standard Time, about 3 hours before the New York Stock Exchange opens. We'll see you here on YouTube. Bye for now. I look forward to having you there. Catch up.